Welcome to the May 21st, 2018 Advance Report for McGowanGroup Asset Management clients and NetWorthRadio.com listeners. I'm Spencer McGowan, your financial weatherman. Let's roll up our sleeves and take a 10-year perspective today, and we're going to give you a read on what the financial markets look like. Growth with income, high cash flow, and safety and income. Those are the three asset categories. We want to be good at all three. I'm going to cover a little bit about some of the best choices in each area right now. Dow Jones Industrial Average. Growth with income typically is big blue chip companies, and we're going to get to a specific category. But this tells us the state of the market. You can see the recovery from the crisis 10 years ago. You can see the post-election rally, which went as much as 40% depending on the index. This is the January rebalancing correction, and putting a lid on equity overall indexes in part has been fixed income. So we're going to cover something about the Treasury and the perspective potentially of institutional and high net worth managers. But notice the 26 to 23,000 range right here. Plus, we've been bouncing around 24,700. I think there's a lid on it, and I'm going to show you why. Here's a competing choice in the safety and income area. The 2-year Treasury has risen to 2.55%. Of course, that's the highest since the crisis. But this slow, steady rise in the short rates. The long 30-year has remained at about 3.2% or 3.1%, but we've seen the short rates move up concurrent with the Federal Reserve. But if you take money, put it in a U.S. Treasury for 2 years, you can get a good safe 2.5%. And for some of our clients, that or the high-paying money market may be the best choice because the duration risk is limited. The floating rate loan funds we'll talk about in this weekend's long play program, that's another choice for safety and income, although it doesn't have the guarantees of a Treasury. Here we are, the high yield index. If we said high cash flow global lending, this is the U.S. B-rated short-term corporate index. Total return over the 10-year period, including the crisis, comes in with dividend reinvestment at about 70%, 5.5% from the crisis. Of course, if we grafted or gerrymandered from the low point, it'd be much higher. This index is still at just 85% of par value, a 15% discount to the par value of that basket of bonds. We use a longer-term high-yield set of choices, but we base it on this pricing. And what's intriguing is that equilibrium seems to be about 10% higher, if not more, giving us some capital gain potential in a fixed income choice that is more resilient than a long-term U.S. Treasury. Now, this is the choice for growth and income right now, the emphasis. We've been covering the pipeline index is the colorful one. The burnt orange is oil, appropriately enough. This week we hit $72 a barrel. This is $27 a barrel back at the end of 2015. Notice the pipeline index in percentage terms and oil crossed each other routinely, and pipelines lagged on the way down, they've lagged on the way up, and the lag is potentially 130% difference with oil at $72 a barrel. That's big cash flow and its gain potential, not without price risk, as you can see. I'm Spencer McGowan, your financial weatherman. Join us at NetWorthRadio.com. Better yet, fill out the new client questionnaire. Get the process started today to upgrade your investment plan, starting with a brainstorming session at the Crescent in Dallas or a conference call, and we will end that call with an investment plan outline that is customized to your specific case. Thank you for joining us. We'll be back next week. My firm, McGowanGroup Asset Management, sponsors NetWorthRadio.com and, of course, our YouTube channel under McGowan Group. Some educational disclosures and discussions that I wanted to add to the broadcast. The first is, I'm very proud of our team, including Stephen Norris, who will be added as soon as we redo the picture. He's our newest team member. Come down, meet the team that cares, get a written plan, because the securities we discuss, the financial news we discuss, that's not a recommendation until you actually come down and get a customized plan at the Crescent. You'll get a tour, and we look forward to seeing you. We're going to cover value at risk of loss in portfolios, and you can see it right here. Learn about our performance, what happened in 2008, how long did it take to recover. All of those items are posted right here at NetWorthRadio.com or the McGowanGroup.com. The other part of the program, when we look at price fluctuations and bear markets and risk control, that's a huge part of NetWorthRadio.com. We look forward to helping you advance your plan and your cash flow. Come down and meet the team that cares.